In this video, we're going to talk about how I pay myself out of my business. First of all, I have an S Corp, and part of the S Corp rules is you must put yourself on a salary to make this whole thing work. And there's a lot of conversations about what's a reasonable salary, and I'm going to really get to that. First of all, how much money does your business make? That's what's the real key to this, because I've seen a lot of videos talking about just write a check out of your business into your personal account, and that's how you pay yourself, which I feel is really bad advice, because if you have a successful business, you have a business that's making money, you need to pay your taxes. And I'm not a person that's going to run a business all year long, and then at the end of the year, I'm gonna have to pay all of these taxes. That's just bizarre to me. I don't understand why someone would want to do that to themselves. Because if you have a really successful business, and let me give you some numbers. Let's say you have a business that grosses $1 million, and after expenses and everything, let's say your expenses are $300,000. So that's $700,000 worth of profit. Do you want to learn how to build a holding company, an operating company, and how to get massive lines of business credit? But more importantly, do you want to learn how to start, management, run, and organize an operating company where you can make money? This is one of the things that we have that's going on in the Corporate Citizen Playbook. And one of the things that you need to do is to go below and sign up for the phone call. What we do is we have a scheduled phone call before you can get into the Corporate Citizen Playbook to make sure that your thoughts and our thoughts match up before we get you into the program, which will constitute hands-on training. One of the things that's going to happen is I'm going to guide you personally through setting up your business, setting up your organization, and doing the things that you need to do to be successful. So go below, there's a little video for you to watch. Then there's a questionnaire. Let me say this, do not go in and half fill out the questionnaire. If you half fill out the questionnaire, that will disqualify you from entering into the Corporate Citizen Playbook, where you can learn how to make 6 figures for the rest of your life. The link's below, check it out. The taxes on that would be insane. You're gonna have to write a 6-figure check to the Internal Revenue Service, and it doesn't just stop there, no. And then you have to handle Social Security and all these other things. So simply, and this is one of the reasons that when I talk about you're starting your business and the first year you don't take any money out, it's so you can handle this tax situation. Now, personally, I feel the best way to do this is to pay your taxes as the money comes in, pay taxes on that money, because it could change depending upon whether your business is doing really well or you have some other issues. Because essentially I pay my taxes every month, and I would be shocked, I would be losing my mind if I had to write a 6-figure check to the Internal Revenue Service and another large check to the IRS, well, to the whatever department handles Medicare and all this other stuff. So I feel the best thing that you should do is to put yourself on payroll. But once again, let's say you just started your business and you have no clue to how much money you're going to make. You have no clue. This is why I say, this is the thing, you keep your job, right? Keep your job to pay your bills. And that first year's income goes in the bank. This way you will have the money to pay your taxes, and then you would be in a really, really good situation. But personally, when I make money with an S Corp, part of the rules is you put yourself on salary. Now, there's a lot of little mitigations with that salary. You know, you could pay yourself like 2 or 3 months and boom, you're done. Or you can pay yourself the whole year. It just depends upon how much money your business is making. So personally, I feel the best way to do this is, number one, to form an S Corp. Now, an S Corp is not a fancy LLC. An S Corp is a tax designation. You elect to be taxed this way. You can be taxed as an S Corp if you have a C corporation. You can be taxed as an S Corp if you have a partnership. There's a lot of ways you can do this, but to keep it simple, let me walk you through my setup. I have a holding company, which is the management company, and I have several child LLCs. Now, the child LLCs are the operating companies, and that money passes up to the holding company, and the holding company owns those LLCs. And when I file my taxes, I have to do what's called an informational return, letting the Internal Revenue Service know who I am, what I own. There's forms where you would list all of your child LLCs on this form, and you would list their EIN and the money that comes in. So what I do is I have my holding company signed up with ADP, and I commission myself a check every 2 weeks. And here's another thing. Let's talk about taxes. 2021 and 2022, I had a car rental business that created a lot of losses, a ton of losses. And thank God I am finished with that, because next year I'm getting a house, and I already know that if you have a business tax return where you're showing heavy losses, that will directly impact the mortgage underwriting process. So I already know that I am not going to go for a mortgage, even though I have good personal credit. Part of getting a mortgage today, and I'm a veteran, I was in the United States Army, I can get a VA loan. And did you know VA loans go up to 1.5 million? But the Veterans Administration needs to see 2 years of tax returns to issue you that loan. So once again, we're still in that problem. So next year, we're going to have a completely clear tax return where I'm paying my taxes and I'm not suffering losses and I'm not having all of these issues. So this is hands down the best way to pay yourself. But once again, if you're starting your business, maybe year one, year two, and you just don't have enough money to pay yourself, this is why I consistently say, keep your job until the business gets to a point where it can spin off enough money to pay you and to pay its bills. This is one of the most important things that you have to do. This is how I pay myself out of my business. I went ahead and filed the election for an S Corp. I've got myself on payroll, and I get a check, a personal check. And also, here's something else too. When you're paying yourself, you're going to pay an insane amount of taxes, because essentially there's the taxes you as the employee pays, and there's a tax form, a tax rate that the company pays. Essentially, I'm paying myself $450,000 a year, and the tax portion, because essentially when I do my payroll, it comes up to $17,000 every 2 weeks. The tax portion, federal payroll, in my pay, it's like $7,000. Well, actually, that's not true. Yes, it is, because my pay is $17,000, but I have to have $18,600 in payroll to address all of these tax obligations that I have going on with my business. My taxes are $15,000 per month. We'll get into future videos. Be sure to subscribe. Be sure to hit the bell notification. I'll be talking about tax strategies. But this year, I am not taking any heavy deductions. I'm not taking anything out. And I'm going to show a very positive tax return for me to go ahead and to get a mortgage without having these issues of underwriters. Because see, this is the thing. When you have a job and you turn in your W-2 and you show your tax returns that you have a job, no one bothers you. But when you're a business owner, like let's say you have a really good year, next year's down a little bit. That could be a problem. They may request to see a third tax return to issue you a mortgage. This is hands down is the best way to pay yourself, is to put yourself on salary and pay your taxes throughout the year. So, because essentially what I could be looking at is paying $225,000 in taxes, federal taxes. This isn't FICA, because essentially the way that I pay myself, once I pay myself $135,000, they stop taking FICA out, and then my pay actually goes up a little bit because they stop taking that money out. There's a limit to FICA, and since I pay myself $450,000 a year, I exceed that FICA limit the first quarter. And then what happens is I start getting like an additional $1,300 into my paycheck. So once FICA's paid, I get an additional $2,600 per month because that's been satisfied. So one of the things that you really want to do is to set yourself up correctly, set up your business correctly. And this is some of the stuff that we address in the Corporate Citizen Playbook on how to set up your business, how to get your EIN. And once again, let me just say it, and there's a training course right here. You can go ahead, and you need some money. Let me be 100% clear. You need $10,000 to $30,000 to actually even think about this, because this isn't something that you can do on hope, wishes, and dreams. So go below, enter into that questionnaire, and then set up a phone call. So that's all I got for you guys. I will talk to you in the next one.